What is tax? Taxation is defined in many ways. Commonly heard definitions include: it is the process by which the sovereign, through its law-making body, raises revenues used to defray expenses of government. It is a means of government in increasing its revenue under the authority of the law, purposely used to promote welfare and protection of its citizenry. It is the collection of the share of individual and organizational income by a government under the authority of the law. Concept of tax. Taxation is the inherent power of the state to impose and demand contribution upon persons, properties, or rights for the purpose of generating revenues for public purposes. The power of taxation upon necessity and is inherent in every government or sovereignty. History of taxation in the Philippines. It all started from the ancient Filipinos, where they pay their taxes to their datu or the chiefs for the protection they gave to them. The tax was termed buwis. Everyone is required to pay their taxes, except for the datu/chieftain's household. Punishment for not paying taxes was also implemented on this period. The arrival or invasion of the Spanish people from 1521 to 1898 gave the Filipinos modern concepts of taxation, wherein 16 years old to 60 years old were forced to pay tributes or tributo to the King of Spain through the colonial government worth 8 reales or 1 peso per year, but there are also other forms of payment like gold, chickens, textile, rice and forced labor or polo y servicio. In 1884, the tribute was abolished and was replaced by the cedula or cedula, a certificate identifying the taxpayer that needs to be carried all the time. If someone is not able to present their cedula to a guardia civil, they will be imprisoned for being indocumentado and quat, which means that they lack valid document or legal personal identification necessary to prove their identity. It was followed by the 1987 Philippine Constitution, stating that it sets limitations on the exercise of the power to tax. The rule of taxation shall be uniform and equitable. The Congress shall evolve a progressive system of taxation, wherein the Philippines covers both national and local. National taxes refer to national internal revenue taxes imposed and collected by the national government through the BIR or Bureau of Internal Revenue, while the local taxes is those imposed and collected by the local government. Lately, the former president of the Philippines, former President Rodrigo Duterte, implemented the Train Law or Tax Reform for Acceleration and Inclusion, which was signed last January 1, 2018, which seeks to correct a number of deficiencies in the tax system to make it simpler, fairer, and more efficient, wherein the rich will have a bigger contribution and the poor will benefit more from the government's program and services. The policy of taxation here in the Philippines is governed chiefly by the Constitution of the Philippines and 3 Republic Acts. Constitution, Article VI, Section 28 of the Constitution states that the rule of taxation shall be uniform and equitable and that Congress shall evolve a progressive system of taxation and quat. National Law National Internal Revenue Code enacted as Republic Act No. 8424 or the Tax Reform Act of 1997 and subsequent laws amending it. The law was most recently amended by Republic Act No. 10963 or the Tax Reform for Acceleration and Inclusion Law, and local laws. Major sources of revenue for the local government units, LGUs, are the taxes collected by virtue of Republic Act No. 7160 or the Local Government Code of 1991, and those sourced from the proceeds collected by virtue of a local ordinance. Taxes imposed at the national level are collected by the Bureau of Internal Revenue, BIR, while those imposed at the local level, provincial, city, municipal, barangay, are collected by a local treasurer's office. Principles of taxation. Fiscal adequacy means that sources of revenue taken as a whole should be sufficient to meet the expanding expenditures of the government regardless of business, export taxes, trade balances, and problems of economic adjustment. Equality or theoretical justice means the taxes levied must be based upon the ability of the citizen to pay. Administrative feasibility. This principles connotes that in a successful tax system, such tax should be clear and plain to taxpayer, capable of enforcement by an adequate and well-trained staff of public office, convenient as to the time and manner payment, and not unduly burdensome upon discouraging to business activity. Consistency or compatibility with economic goals refer to the tax laws that should be consistent with economic goals or programs of the government. These are the basic services intended for the masses. Tax exemption. religious institutions, charitable institutions, non-profit, non-stock educational institutions, non-profit cemeteries, government institutions, foreign diplomats. Purposes and significance of tax. Primary purpose: generates funds or revenues used to defray expenses incurred by the government in promoting the general welfare of its citizenry. Other purposes: to equitably contribute to the wealth of the nation. How to compute income tax in the Philippines. Computing income tax expense and payable is different for individual span corporations. Taxable corporations may be taxed using a fixed income tax rate. On the other hand, if you are a self-employed professional or an owner of a single proprietorship business, your income tax expense is computed using a graduated tax rate. It is a progressive tax which the tax rate increases as the taxable base amount increases. This means that the higher taxable income you have, the higher your income tax.